All right. Lately, when I come on to Twitter, um, there's just all this negativity and animosity between people, and different people have these different like theme Twitter accounts, like anti Kanye or something like that. And a breath of fresh air in that group is Steve Burns, who I have in front of me on the actually in the phone today. Welcome to the Short File Show, Steve.
Thanks for having me today, David. I agree completely with the negativity. People should realize on Twitter that being negative actually lowers your IQ. It's actually proven that people are less intellectually sharp if they're being negative. So that's something they should take into account when they are negative on social media.
Oh wow, I didn't even know that. Yeah, well, I found you, and I've always appreciated your tweets because you just have this certain energy about you, which is uplifting and, like I said, sort of a breath of fresh air in this world of negativity. When in the trading world, there's this phenomenon of like tribalism where we've got the bulls versus the bears, or which
Yeah,
is
crypto versus stocks.
yes, hodl crypto versus everyone else.
That's very true. There's very segmentation. I'm always surprised when I see being shared across different genres where crypto traders on Instagram will share an image of my tweet, and then trend followers will, and I can interact with market wizards. And it's really cool being able to be in all the different genres.
Yeah, well, I mean, I have to give it to I have a couple friends who like were bugging me about buying Bitcoin when it was around 3,000, and they ended up making they did, one guy bought two of them, and he made a bunch of money, and I was wrong. I should have jumped on board at that point, but ever since January of 2 years ago, it seems like we're kind of past the hype.
Yeah, the big thing that I learned way back in the dot-com bubble, where I thought I was the total tech guy back in the '90s and thought I knew something. And only way you can make money over the long term is have a repeatable process. And it's not even defined yet whether the guys that did buy the Bitcoin early did the right thing. They might have been doing the wrong thing and got rewarded for buying Bitcoin at the exorbitant prices. The people that did the right thing was buying it before all the adopters and then selling it before the plunge. Those are the people that did the right thing. So history will tell, what was really going on. We don't know if one of those currencies is going to be adopted mainstream and is going to be applicable, or they're all going to go to zero. We don't even know yet.
Yeah, I mean, it's sort of like there's like this cover story, and then there's the reality. Like I'm talking about during this sort of like tulip contest type phase of Bitcoin. There's been this, people will tell you, oh, it's a new technology that's going to revolutionize the world, and I'm so excited about this technology. But these are people who, they didn't ring me up every time there was a new iWatch or something. They're not interested in technology. They're interested in making a fast buck, and that's what it was all about. It seems like, I mean, for most people.
It surprises me how similar the dot-com bubble in real time when you were there, how similar that was, where the internet's going to change the world. Amazon's going to go to $2,000 a share, and they were right at the dot-com, the internet. They were right about the technology of the internet, but it really took 20 years. We're just now getting to where the rewards of the internet are real, with all these publicly traded websites that are actually making earnings, and Amazon really was $2,000 a share, and people are monetizing their internet platforms. I mean, it took us 20 years. They were right, but they were 20 years too early.
Well, I mean, it just goes back to sort of the nature of what Bitcoin is. I mean, we're going off on Bitcoin for a second here, but that's fine. It has sort of no intrinsic value. It's like there's a difference between investing in a company that like mines Bitcoin, or that uses the Bitcoin technology, as opposed to investing in the actual like currency. At least with the dot-com stocks, you were buying a company. Well, maybe it didn't have any earnings or anything, but you were buying something that could have some sort of intrinsic value. If a company bought a bunch of mainframe computers, even, or phone lines, I don't know, at least it's got some sort of like physical value to it.
Yeah, that's what you're saying is very similar to what Warren Buffett said. That doesn't create anything. It actually burns energy to replicate what a check can do, or what debit cards or PayPal can do. So, Warren Buffett and Charlie Munger are completely against it. Like just what you're saying. I don't know if you've read their opinions, but that's what their opinions are as well. And, during the dot-com, we were actually valuing off eyeballs. Like attention had value in the dot-com era before anybody monetized.
Well, I don't want to be like one of these people that predicts the past and says, "Oh, I told you so with Bitcoin." That's not my point in the whole thing. But I think that it does bear examining as an example of a uh, some sort of phenomenon where something just gets bid up, and then and it was also interesting to see people start out as quote unquote brand new traders and what sort of their behavior was with first coming into a product that moved up and down for some of these people that had never traded before. That was interesting to me.
Yeah, it was fascinating to be part of one of the. I mean, it is mathematically one of the biggest bubbles in financial history, regardless of what the cult members say that aren't using their logic and reason. I mean, that is a fact with the mathematical parabolic move that Bitcoin had with no underlying value. So that we did get to witness one of the biggest financial bubbles in history. What happens next is anybody's guess.
Yeah. Well, you and I have a little bit in common in that I was looking back. I watched a couple of videos on you today, by the way. I was doing a little background work. And I noticed that you and I started about the same time. I started as a runner on the floor in 94. And I believe it said you started around 93, maybe. So we started around the same time.
Yeah, yeah.
And I noticed that we both kind of got hurt a little bit around the 2000 burst of the internet bubble. I was there for that. I was around at that point, and I suffered possibly in a little bit different way than you did, but I took a what do they call it, a drawdown. That's the friendly way of saying I lost money these days. I took a drawdown then. So
yeah, my peak was March of 2000. At some point, I remember having enough in my account to pay off my house, and I was about 27 years old, I think.
oh,
And
wow.
I'll never forget that my account equaled my mortgage payoff. And I thought, wow, this is really amazing. And I remember that moment of thinking, man, this is, and started projecting out what the earnings could be long term. And then, like you said, 50% drawdown, and didn't really start getting back to those levels until 2003, 2004. I got back to my previous equity peak from years before that. So that is a very educational experience in risk management.
Wow. Yeah, I had a somewhat more dramatic situation, but with a less of a happy ending than yours, where I was up about $2.5 million in my account through April of 2000, just on the year, and ended up losing about 650,000 in 1 month, and it was just devastating.
Yeah,
And I didn't know what to do because the paper dried up too.
yeah, it's amazing. Liquidity itself. Yeah, you can always see that there's liquidity's missing is when you get those real nasty downturns.
Mm. And I was doing complicated stuff. I was long back month options, and the volatility collapsed, and I was stuck. Net result, I ended up losing a bunch of money, and I never actually really completely recovered until I got back in the business a few years ago. So it was a devastating emotional thing for me, 2000. So when I hear you talking about it, I can empathize with you on
Yeah,
that score.
it's amazing when once you make that money, it's like it's yours. And even if you made six figures, multiple six figures, like you're saying, even a million, it still hurts to lose that money because it comes back out of your account. My highs and lows haven't been quite as dramatic by any means, but completely understand what you're saying.
Yeah, oh yeah, it can drive you crazy losing money. It's one of the worst feelings. My friend Bob, he says, don't get too happy when you make money, and you won't be too bummed when you lose it. And I try to live by that, but it doesn't work so well when you actually lose money sometimes.
Yeah, it's amazing. It's interesting to learn how to get through that kind of pain with position sizing and stop losses. That might be one of the biggest skills, is learning to lose well so you can make money in the right environments.
Yeah, I would totally agree. And there was a guy who used to stand next to me in the pit, and he would say, which I think is the opposite of the right advice. He would always say, double up to catch up when things went against him, and that is kind of the opposite of, I think, of what most people teach these days. If you have a loser, I kind of say give up and move on to something else.
Yeah, I think Paul Tudor Jones probably has the best trading returns consistently for the last 30 years. He had on his wall losers average losers. I think that is so true because all it takes is getting caught on the wrong side of one trend and adding to that position that will undo everything you've done in the past.
Mm. So let me give my viewers just a quick background on yourself. I know that you let me tell you what I know about you, and you can fill in some stuff for me. You have a trading university sort of website. You're a published author. You've had many books in the last 10 years.
Mm-hmm.
You are known for being a Darvis acolyte partially, and for charting and just general education of people in finance.
Yeah, I've been active in the market since the early '90s, and I've
Okay.
evolved. I've always traded my own accounts and built up capital and compounded capital, and spent 20 been in the markets for well over 26, 27 years. I financially independent in my 40s, completely from really having to worry about money as much now. I really enjoy all the research goes in the stock market and back testing and trading. I still trade my account. I'm not quite as aggressive as I was in my younger days. I'm more concerned with maintaining what I have than trying to exponentially grow it any farther. You've got to keep trading to keep up with inflation, and so I'm sort of semi-retired. I trade my accounts and I run my New Trader U website, and really enjoy social media and writing books.
Well, there's different audiences that we talk to when we're talking online or when we're teaching people, and I've been interested in the audience of people who are just, let's say, normal people who are not saying, "Oh, I'm going to become a trader. I'm gonna trade, and that's going to be my thing," but just the general public who are have some other profession, and I fully believe that there's a lack of education on finance and what you do, how you save money throughout your life, and how you go about your finances. And I'm wondering what you would think about what would be the way to kind of make it better for our students these days. Like what sort of topics would you submit in a class if we were going to have finance class along with history, math, and science for kids?
It's funny you say that because there's so many people that want to trade actively, and that's one thing to trade an account actively. Even if you have another profession, you have to have enough capital to make it meaningful to be active.
Mm-hmm.
But not only that, but I mean, a lot of the people that want to trade, they need to be listening to Dave Ramsey or Robert Kiyosaki, not really
Mm-hmm.
going into active trading. You have to have capital to actually trade with. I think it's really crucial to understand when you consume too much when you're young, you're burning through all your capital. It is absolutely crucial to live a reasonable lifestyle within your means so you can accrue the capital to trade with. And just the opportunity that is in the stock market, not even actively trading. If you just get money into a stock market, if you have a 401k match and you start getting your 100% return on a 401k match, if you put 5% in. So you need to start growing capital as young as possible and not spending all the money you make on vacations or brand new cars or houses, big giant houses. You only live in a third of it. I think a lot of that's missing in the trading industry. And a lot of the real traders I know that are full time, that have done it, that do it for a living, they're not out with mansions and Lamborghinis. They're pretty conservative people because you have a burn rate of your capital, whether you're working or you're trading for a living. So you have to really be cognizant of how fast you're burning capital versus how much you're making. So I think a lot of people, like you said, need to start with personal finance, because if you can't be disciplined with your personal finances and your budget, and you can't win in a career that you're in initially, it's going to be really hard to go into the financial markets and beat people that do this for a living every day.
I suspect that you have a similar experience to me, that in my social life outside of YouTube and all this stuff, people are always coming up to me and saying, "Oh, you were a trader. How do I save my money? Or what's your investment advice? Or can I give you $1,000 and you can make me 10 off of it?" Has that ever happened to you?
Yeah, it's comical. The people that think they're big shots. I mean, they'll message me, people that I know, in my private life, or friends or family, whoever I know, and they'll message me, go, "Hey, I got $1,000. What can you do with it?"
Yeah.
If they're big shots, I can fold it in half and give it back to you. I mean, that's nothing. I mean, that's just comical. I mean, if you want to make any kind of a sizable trade, you're going to need tens of thousands. If you want to have a real account, you're going to need hundreds of thousands to really do it, and you've got to get that from your original source. Whatever you're doing, you start out in life, you have to build up that capital from somewhere. Work in the industry that you love, and find a way to get that. But yeah, you're exactly right. Is that they have no concept of how this works, and they also think the 1% risk rule. Losing 1% of your capital on trade is not worth doing. But if you have $200,000 at 1%, you're risking $2,000 to make maybe 6,000. And that's worth doing, but they can't wrap their brain around. They're thinking of whatever their account is. So Yeah, the majority of them are just so undercapitalized they can't even actively trade. I mean, they can invest, they can dollar cost average into something, but they can't really actively trade because they don't even have the capital.
Well, I can feel Warren Buffett behind us as we talk about this right now once again, because I know he always talks about, the one of the keys to being successful financially is to have that engine of your quote unquote regular job or whatever else that you've invested in yourself by maybe going to college, and you have some sort of advocate. Is it advocation? Is that what they call it? A job.
Vocation.
You have a vocation, and that is the engine which is going to help you build things up from. You kind of need that. You need that to start as a trader, and you probably need that for a while as an active trader. Having that steady, I don't know, $500 a month, $50 a month coming into your account every month can really hide some growing pains, and B, it keeps the pressure off. I would think.
Yeah. You can't have a kindergartner overnight. You have to be pregnant. You have to give birth for 9 months. You have to let it go to. You have to there's a process. These people want to. Too many people want to go from kindergarten and graduate from college and trading, and they have not even graduated kindergarten in personal finance. I mean, it's very complex. There's too many the get rich quick people, and that's what so many other people prey on with their ridiculous videos on YouTube all day long and their mansions and cars and vacations, and that's just so absurd. And like you said, people say, "I'll give you 1,000," you turn to 10,000. Like if it was that easy, we would be billionaires so quickly.
Right, all the money in the world would be concentrated.
Yeah. It's a systematic process of repeating edges that grow capital over long term. And the best traders in the world make about 20% a year.
Well, you know that in this industry there are a lot of hucksters who are out trying to sell snake oil, and it's especially true on YouTube. And people are naive and they want somebody who can tell them what to do. They'd love to join a chat room and have someone say, "You buy this and it's going to go up," and you buy it, it goes up. Then buy this, and you're sold this bill of goods, like you said, where a guy trades for 10 minutes a day, then gets in his Ferrari and drives to his jet ski, and then and you're pumping iron and all that stuff. And the actual reality of what most traders' lives is like is not as exciting as that at all.
Yeah, it's funny the grind that they go through. Even some of the market wizards, the market wizards all have pretty, not the billionaires, but the millionaire market wizards. They're pretty moderate lifestyles. They're not trying to impress anybody with anything, and they have to have enough money to live off of the rest of their lives. That's something people don't realize. And you also, when you're trading, it's not like a job where you're gonna trade and you're gonna get money. You can trade and you can lose money, or you can trade and you can make money. You can lose and get back just as much as you make. I would be surprised to know how many Bitcoin people that were millionaires, but they gave most of it back at some point and didn't have an exit strategy. So it's very complex in the trading to compound and build up capital and have the returns. And it's very hard to have consistently monthly returns. Only Bernie Madoff had consistent monthly returns. Shooting for annual returns is a much better strategy.
Well, I like my specialty as far as like on YouTube and sort of on Twitter and whatnot is trading the VIX. And a lot of the trades to do with the VIX are very sort of short-term-ish, leveraged, and it's not the kind of thing that you want to bet the farm on. I don't think you want to bet the farm on anything, but especially with like a leveraged volatility product. And with the big pop that we had in the VIX, I guess 2 Februaries ago, I found that a lot of my viewers had been sort of going all in on the trades I had been talking about. So I'm very cognizant now to step back and say to people, look, there is, all of us as just members of the public who aren't traders should have some sort of plan for the future financially that's somewhat more conservative. And, some people would say, all right, a quick way to say that is, buy the SPY and leave it somewhere. Buy some SPY or leverage SPY or whatever and leave it somewhere. And then
maybe throwing some moving averages for trends.
Yep. And maybe dollar cost average, have it take a little bit out of your paycheck every month. And especially, of course, take advantage of any sort of 401k situations you can in your company. And if we could just get people over that one hurdle there, that would be amazing.
Yeah, if people aren't getting their 401k match 100%, if they're not putting in 5%, getting a 5% match or whatever they get, if they're not doing that first, then that's 100% return right there.
Right.
That's
It's free
100%
money.
return.
Yep. Yep.
You don't have to worry about trading. You just get your 100% return if you're still an employee and you have that. So, I mean, like you're right, that's the first step. But like you said, like trading VIX, one strategy, I think it was Larry Connors that back tested that has worked out for over 20 years, is a 10-30-day EMA crossover system in VIX. You short the VIX when the 10 crosses under the 30-day EMA or whatever product you have short side, and then you cover the short when the 10 crosses back over the 30. I mean, it's not a long side because VIX deteriorates over time with the VIX products, but you go short when the 10-30 EMA crosses. It's just a trend system. You have bigger wins and smaller losses in the system, but like you said, you have to have position sizing. You go all in the first big whipsaw where you enter on the cross and it whipsaws against you, which will happen. You can get blown up in one trade. So even though you have a good system with an edge that captures trends and has big wins and small losses, the position sizing has to be there or nothing. It's not going to work anyway because the first loss is going to be your last loss.
It's hard for people, I think, because they get into trading because it's exciting to them, and some people want that excitement, and having someone tell you, oh, you can only, your trade should be 2% of your account, that doesn't sound exciting to them, and I felt this feeling myself before, and it's something that you have to think about rationally ahead of time before you get in that moment, because you hear the guys in the chat saying, I'm going all in some penny stock or something, and it sounds exciting.
Yeah, and if they want entertainment or they do it for fun or for sport, I mean, that's fine if that's what their goal is. I mean, good for them. But if you want to build some wealth or you want to do it for a living or you want to retire young with it, you have to have a key strategy and you have to manage your risks. I mean, like you said, that they don't understand too. If you get a 50% drawdown, it takes 100% return to get back to even.
Right.
And I think I've tried to crawl out of 2 of those holes in different accounts in my trading in my life, and it is a very difficult, much easier, to get a 10% drawdown and go back to 11% trading smaller, or even go down 20% and go back, get a 25% run to go back to even. Much easier process than it is to go so big and go so down and then have to. I mean, even the risk of mental ruin you have when you go down 50%, you doubt if you're an idiot at that point or if what you're doing even works. And a lot of it, just like you said, comes right back to position sizing.
Right, and keeping it manageable. The emotions of trading is such a huge thing too. And for me, I was trained as a professional market maker and went through a rigorous process where people had kind of studied ahead of time and had many people go through the process before, so they kind of knew what to look for and to teach us that, like, it's gonna, for some people it's gonna take a while before you can not be emotional, because money is such an emotional thing for people.
Yeah, that's what they underestimate. It's emotional enough in personal finance and paying bills, and insurance claims or wrecking your car. But to be sitting there, most people, especially, I know when I started out, I don't know about you, and seeing hundreds of dollars whiz by and then, ramp up and you start seeing thousands of dollars and then you have a moment where you've lost 3,000 or 4,000, or you've made 10,000. It starts to really almost, I think it triggers the same part of your brain as cocaine does with serotonin or dopamine. So you start having you have to really be mentally strong to not do foolish things. I think we've all been there early on, trading with some size for the first time, starting to do foolish things because there's all kinds of mental and emotional and hormonal things going on that's causing the greed and the fear and the ego to kick in.
So let me ask you something. When we were talking about Twitter for a second there, the United States, it seems it's become very polarized politically, right? I mean, that's an understatement, of course. And I don't know if you're like me, you try to kind of avoid politics at all costs, especially when you're trying to build a group of people who are you're giving advice to and whatnot, because you don't want to step on people's feet and whatnot. That all being said, does politics does that come into your strategies at all? Do you think to yourself, oh, if this person wins, then this is going to happen, or is that not anything to do with your approach?
No, it really isn't, because I thought Trump had the demographics to win for all the people that he had, and nobody believed me at the time. I actually tweeted it to one person on Twitter, and my wife was arguing with me saying, "There's no way, he's going to win. I said, I think he's going to win. I think he's got the electoral college and he's got the right demographics. And it couldn't help me in my trading. I mean, how do you trade? It was 1,000-point Dow crash in the futures when they knew he was going to win. And then it gapped up 300 points the next day. I mean, how in the world do you use that knowledge? And then it took off in one of the biggest parabolic runs ever. I mean, I don't know how you would use that to think that's bullish when the future said it was bearish. And then the next morning, like it ran away. So I think I just stick to my quantified signals.
Yeah,
And
I mean, it's a real whipsaw. Yeah.
Yeah, you're going to get yourself. I mean, I don't know how to. Even people think, even if you knew that, I don't know how you would have traded that. Because you would have thought. I mean, I was watching it, going, "Oh my gosh! If you would have shorted it and he would have won, you'd made kill him." But by the morning, you would have blown up shorting too many futures overnight.
Yeah.
So pretty incredible. Yeah, I don't know how people would really use that for their actual trading, because the price action, just like earnings. If the earnings it's how much the earnings are priced in. It can collapse on great earnings or it can take off on bad earnings. All it depends on is the unexpected.
Right. Yeah. I mean, earnings can be good, bad, or indifferent, and the stock can go up, down, or do nothing. It's like it seems sort of unattached, because you can't tell if it was 15 cents, expected 11, but they really thought it might be 17. So
yeah,
it goes straight down or something.
It's very hard to tie it up. I mean, the best way to do it is even sentiment, where you think everybody who possibly could have sold it's sold, and everybody in the world's bearish, and then you can start looking for bull signals. But I don't think you can trade alone on that.
So if I'm if I'm just listening to this podcast right now and I'm new to the markets and I'm I'm like, wow, this sounds really great. I would go to your website and I would pick, what would I do? Would I pick a certain class, or how would I get going? Let's say I was like, wow, this guy's the greatest. This sounds awesome. I want to learn. What would I do?
Yeah, I guess if you're a book kind of person, I mean, I'm more of a book person, so I would, I have lots of different books to choose from. My New Trader 101 book is just the basic principles of profitable trading. Risk reward ratios, trends, patterns, psychology, risk management. It has all the basics. It's what was I tried to write the book I wish I had when I started. I read, I think it was over 400 trading and investing books and personal finance, over a 20-year period. So I'd read about every trading book I could get my hands on for a very long time, trying to really learn and understand this and pick up everybody's wisdom. So I try to compress the actual principles that mattered in the New Trader 101 book. There's also a New Trader 101 e-course. If you'd rather actually hear me talk about each slide and each principle, to you as well. So that would go step by step. If you more like fictional writing, I have a book called New Trader Rich Trader 1 and 2 that actually has a story of a rich trader mentor mentoring a new trader. And it actually tells more of a story and has all the key principles of what rich traders do versus what new traders do and all the errors new traders do. So, and then the New Trader 2 has good trades versus bad trades. So those are some books to start with for people that are just interested, want to know what this trading thing's all about.
Well, I'm glad you mentioned that last one, because that's the one I ordered today. And I mistakenly ordered it for Kindle, because I actually did want an actual paper book, and so I had to back it back out and get the paper copy. But I got New Trader Rich Trader second edition, so I'm looking forward to checking that one out.
Yeah, that one's been incredible. I read that second edition. It has I think it's 91 5-star reviews on Audible and 21 4-star reviews. That was incredible. People love the Audible version as well. So that was really good. I really was passionate and really had a story to tell when I wrote the New Trader book.
Now, did you actually read it yourself for Audible, or how does that work? Or do you hire?
I tried. I tried. That was my original plan, because my wife's great at voiceover, and Holly, she's a genius at all kinds of tech things. She's really the one, the web developer, and created all the online stuff that she did. She used to work at tech companies, so she's like, hey, you should have your own website, and you should do this. And
I was reading about her today too. Yes,
e-learning, and so she did a bunch of cool stuff. But I tried. But my Southern accent, I don't realize how bad my Southern accent is. I'm from Tennessee, so it didn't play as well. And plus, the quality controls on Audible, you have to really get a professional with the right equipment and it's trained to voiceover to do it, or it would have taken me the rest of my life to do that. So yeah, we went with a great narrator.
Oh, nice.
And he did a phenomenal job. Everybody says he's phenomenal.
And what would you beside your own books? Who are some of you said you read hundreds of books on trading. What are some? Just throw out a couple names that people might check out. I know you mentioned Market Wizards, which is one I know.
Yeah, I think the game changers are trend following with Michael Covell. I mean, he's a friend of mine, and he's just, I mean, just he does some of the best work. Him and both, like you said, Jack Swager and all his Market Wizards book. I mean, those guys really went to the best traders in the world and found out what made them profitable. That is the best source you can go to.
Mm.
You know, what I have done is aggregate, all those interviews and all the stuff they've done and try to really get the core principles in both what they all did and also researching them individually and what I did to get the compounding big returns for long streaks of time to build up myself to financial freedom. So sort of, they were the biggest inspiration to me by far. And, they don't go by what they believe or what's going to go up or any kind of stuff. They actually, they focused on what actually worked for the biggest names in the industry.
And when we were talking about personal finance there, I think you did mention Rich Dad books. Those are fun. And I was watching that what's his name, John Oliver show, the weekly comedy show, and he was ripping on Dave Ramsey, which I wanted to stand there and defend Dave Ramsey a little bit. He's like, he's an angry, grumpy old man. But the thing is Dave Ramsey tells it to you straight, and he's got some great advice. Just, some people don't have, I fortunately have a father who is very conservative and will lecture me on these sort of things. But if you don't have that, you can get Dave Ramsey, and he will do a similar things, and he's going to tell you, don't get all this credit card debt, pay that off, and, be reasonable with your purchases and this sort of thing.
That's funny is I actually listened to Dave Ramsey when he first came on in Nashville.
Oh, really?
I think it was 93, maybe 1993. I think I called into his show when he was still with Roy Matlock on the Money Game.
Oh, you did?
Wow. Yeah, that's funny. Steve Burns called into Dave Ramsey in 1993. I've actually followed him, but it was pretty. I mean, I always knew, it's common sense. You know it, but you want to go buy new cars, you want to have things, and that's cool. If you want to go get a payment, you want to be trapped in a job and trapped in whatever. Financial freedom is one of the biggest things I've been tweeting about recently. Everybody seems to be very passionate about financial freedom. I am trying to work on a financial freedom book and trying to bring all the pieces together. It is complicated, but Dave Ramsey, he gets you, the financial defense, but he doesn't do a good job on the financial offense of, building anything, even like the whole buy and hold. He almost lost his own faith in buy and hold at the bottom, March of 2009, around that time period.
Oh, really? Okay.
He said, somewhere I read in a book, I think he was standing in New York and looking up at the Dow at whatever it was, 6,000, and was very concerned he'd give everyone advice to hold through all that and wipe out all their gains. I think the low was wiped out all the gains since 1997. And he had a moment of doubt whether it would even come back, because in 1929, it didn't come back. It kept going down. I don't think it came back to even until 1952.
Yeah, and if you puke at the bottom, it doesn't really, the strategy doesn't end up working out for you, I guess.
Yeah, and that's what people do. So, I mean, I think some good long-term moving averages is a much better filter than buy and hold. That's one thing I definitely disagree with Dave Ramsey.
Yeah, I was reading some of your comments on that. Well, my family is like many in the United States who, buy and hold was what made our success from generation to generation for our family was buy and hold, and it worked. It worked for us, and it's worked for many people. And there's always that question in your head: Will that sort of thing continue forever? And every time we have a big down move, even like last, that scare sort of thing in last December, people are, oh, it's all over, Getting along the market is not what you do anymore to make money. You have to employ some other sort of strategy.
I think what people have to understand buy and hold works in the indexes. Buy and hold, the S&P 500 and the Dow Jones Industrial Average and the NASDAQ 100, they bring in the winners and push out the losers in the indexes. That's where buy and hold works. If you buy the entire market in stocks, buy and hold does not do as well. It does better in concentrated indexes because a large majority of stocks do go to zero, and the majority of the returns in stocks are from a very few stocks. Well, most of them, all stocks eventually go to zero, even Sears. But that's one thing people have to understand. The alpha comes from a very small basket of stocks, and the indexes happen to always have those stocks in them. But they're a system in themselves that churn out the losers and bring in the winners. So that's something to understand, that it's not really the buy and hold in individual stocks. If you picked 5 stocks and held it, they may or may not work. You have to have a big basket of all the stocks if you want to do that.
And it's the fact that the indices are rebalancing by bringing in
Yes.
winners at all the time that makes them so successful.
Yeah, and then weighting towards the winners too by
Well,
market cap.
well, it's like it's like how do you create a wave in the ocean? Well, you've got a long distance and you've got a wind pushing you. It's the same thing with investing. The longer time you have to do it, that steady, and it's also compounding, obviously, which is
Right.
such a huge thing for
I think that's
the market.
I think Warren Buffett's really his real holy grail was compounding, getting companies that compound earnings forever was one of his magical things. Did you see the recent way he beat hedge fund baskets? Did you see
No,
what he did?
no.
He challenged some people, somebody that they could pick out any 5 hedge funds they wanted, and he would beat their returns over. I think it was an 8-year period. It's either 8 or 10. I think it was 8. And he challenged them. So some people picked out 5 hedge funds, anybody they wanted. He started 2009, towards the bottom even. And recently he beat them all. He beat all the hedge fund baskets, and his play was buy and hold SP 500 index, Vanguard.
What about people that would want to buy Berkshire Hathaway? Do you think that's a legitimate way to invest? I know it costs 300 grand a share, but there's a smaller one I think that you can buy a fraction of.
I've got a actual long term holding on a B share, the smaller one. Yeah. But actually, one of the best mathematical investors in history was Edward Thorpe, and he was a big buyer of Berkshire Hathaway. He believed when you bought Berkshire Hathaway, and he's been doing this, I don't know, 20, 30, 40 years, he believed you put Warren Buffett to work for you. Warren Buffett was your portfolio manager with the way he managed Berkshire Hathaway. And it's also an alternative to the S&P 500 because Berkshire Hathaway is a conglomerate that is so well diversified with great companies that it's impregnable. It can't be destroyed like a retailer or a tech company because he owns everything. So it's sort of like an index in itself, Berkshire Hathaway.
Did you study Jesse Livermore at all?
Oh yeah, he was. He's one. I read his book. I read all the books about him. I read Reminiscences of a Stock Operator multiple times.
Yeah.
And interesting. And people try to slam him, saying he killed himself in the end, so he's not to be listened to. But he had some of the biggest trading wins in history, inflation adjusted, and he did have bipolar issues. And I think some of the mental risk of ruin played in at the end there, where he just traded way too big, way too much, and had too many blowups. I think his only weakness was money management.
Yeah. I mean, he had several rags to riches stories in his career. You had this thing TrendSpider on your stream. Is that something that you use?
Yeah, I'm actually partners. New Trader University is partners with TrendSpider. I believe in their platform and trying to learn it now. They actually have a back testing option they're building into their chart itself, and they're also working on creating weighted candlestick charts where it actually shows the volume on the candlestick itself. So, I've talked to the owner. It's pretty fascinating platform they're building.
Yeah, I have a friend who I forget which one he might use. I think he uses the SIBO Live Vol product that has. It's very much volume in the candlesticks as well. That's becoming a big thing as more people get into VWAP as an indicator and other sort of. And to me, it's almost like different people, they feel the momentum of the market and they're able to express it in different ways. Some people are able to express it as saying, well, I can point to this chart and I feel this indicator has momentum. Other people can kind of just feel it as they watch time and sales. Other people just kind of watch for me as a market maker, I watch the tape for years and just watch stuff trade. And some of the things that are signals to me, I can't express as readily as some people can with the charts, but I'm seeing the same thing.
It's sort of like experience becomes subconscious, like you connect dots subconsciously through years of experience.
You feel the momentum.
Yeah, and then other people, have quantified systems. They completely are mechanical, and they all make money. There's a lot of different ways to make money.
Yeah, totally. So, is your I was thinking you have a huge following on Twitter. I mean, it's like over 150,000 people. I mean, imagine if all your fans sat in a stadium. That's like a huge, like, I don't know, it's like Live Aid concert or something of fans. How come you don't have we got to get you the blue check somehow. Who do we call?
I'm sure I've talked to people that know people at Twitter, and I've messaged them. I have like almost one impersonator every few days now nonstop, and I don't understand what that triggered it. And I sent in the moment they had that last time they opened for the blue check marks. I submitted my information within 24 hours, and a lot of other people got their blue check marks, and I did not.
Oh wow.
So I think it has something to do with Steve Burns from Blue's Clues having a blue check mark.
Hmm.
I think that's my only theory because I have changed to my legal name. I've changed to my the Steve and the Steven and submitted 4 or 5 times for the blue check mark,
Wow.
and just nothing. But and Instagram too. I have I think it's 62,000 on Instagram, and I've submitted my blue check mark there and haven't got one either. So
Wow.
not sure what the confusion is, but it really doesn't matter for the most part. But it'd be nice to just verify so
Yeah.
people don't get tricked by all the pretend me's on Instagram and Twitter.
That's amazing. There's so many pretend yous out there. Yeah. Did you watch any of those documentaries on like the Fire Festival and those
Oh, I
festivals?
loved them. It was so entertaining.
It makes me think of those guys that what was that publicity group? It's called like F Jerry or something. Do you
Yes, yes.
now did you actually do you actively pursue a strategy of trying to get a lot of followers on Twitter, or did it just kind of happen that way for you?
Well, I sort of just use it as a stream of thought, and I do like to share things, tweets that people like. I will reshare them
Yeah.
that they like them, and I just try to make entertain and educate my followers. So yeah, I do put effort into making a good tweet stream. But yeah, there is a lot of quantitative analysis that you can do, and that F Jerry thing really shows that it's crazy that they just like pick out one funny thing a day and send it out and end up with millions of followers.
Yeah, it's unbelievable. Do you have specific tools that you use to monitor or to manage your Twitter following? I know
Yeah,
there's
well,
all kinds of tools out there that people
yeah,
use.
yeah, I do use I use Hootsuite. I can send out some blog posts to my Indian followers, because there's different time frames in Europe and India. I got a lot of Indian fans, so I will send out blog posts in their time frame and European time frames
Indian, huh?
overnight.
Oh, that's
Yeah,
fascinating.
yeah. We used to have a joke that most of the people in India are trading forex, and I thought that was a joke in a Twitter, a Facebook group a long time ago. But my goodness, they are really serious over there. I think we need to all step up because they are serious about coming on in the world as an emerging market.
I have never really understood how to trade forex. It's not in my wheelhouse, and it just seems like such a binary thing. And I know that they use people who have a knack for it can do it really well, but for me, it just seems so hard.
Yeah, I'm the same way. It's like you're short one currency and you're long another. You're playing them against each other, and they have like the pips are so small. I much prefer equity classes that have long-term accumulation and distribution cycles so you can really have trends, and you can really see that in back testing indexes and major growth stocks where the trends are, and I just don't see that in forex.
Yeah, I had a roommate when I lived in Chicago who was he was a broker in the yen pit at the Mercantile Exchange. So he was next to all the biggest traders in the world in yen, or the ones who were on the floor. And he tried to pursue a macro type approach of like kind of trying to analyze what world events were happening to either get long or short the yen. And that seems just so hard to me. It's like, oh my gosh, how can you account for everything that's going on? It's tough.
Yes, I don't understand. I've never quite understood that. I mean, really, all profitable trading comes down to either high winning percents and all small losses, or bigger wins than losses with a lower winning percent. I mean, that's it. Everything else is details.
Well, I mean, the other amazing thing about your Twitter is that you'll see a lot of people that have big Twitter followings, but it's because they play these games where like they follow all these people. So they'll have like 1.4 million followers, but they'll follow 1.3 million people, and they don't actually produce content. They just kind of make noise so that someone will
Yeah.
follow them, and that drives me absolutely insane.
Yeah, I used to follow back. It used to be a follow back thing. I think I followed everybody back just to have a follow back to I don't know 10,000 followers, and somebody kept saying you don't have any real followers. You're just following everybody back. That's why you have followers.
Yeah.
So I unfollowed everybody, but a
Okay.
couple hundred people, and then grew it to 150,000.
Wow. Yeah.
So I mean,
Yeah, I mean, I started a little bit of that follow back stuff at one point too, but then my stream was just clogged with all these
yeah,
people saying follow me, and it's like, why should I follow you? You're not tweeting anything except follow me again, and like I couldn't find the actual trading post because there were so many of these follow posts everywhere.
yeah, same experience. I had to clean all mine up, and now I just follow the best of the best on Twitter.
Nice, nice. So, yeah. So I guess you answered the question about during your average day now. Are you active? Like, what is your average day like? Are you actively trading, or are you working with your on your website with your wife and writing?
Well, yeah, well, she really does most of that.
Oh,
I do
really?
write for
Okay.
a couple hours a day, but I'm primarily a trend following trader and a swing trader. So almost all of my signals come end of day. So
Okay.
I will check in if there's some high volatility spike that might give me too big of a loss and have an emergency stop loss. But I do end of day signals. So
Okay.
based on there's a signal like the 1030 EMA cross under on the VIX as an example of what a short system would be,
Hmm.
and I would see if the cross is under or over the end of the day. So, I probably spend 4 or 5 hours a week looking at signals at the end of the day. And I do have a private Twitter group for my newsletter subscribers, and I do go in there and just say what I'm doing. I don't tell them what they should do, but I just say I'll signal what I'm doing and explain the principles behind it.
Okay. And do you for your website? Do you actually teach classes, or is there like a live stream every week or something like that, or is it a little bit less like
It's just
work?
they're static e-courses that are
Got you. Okay.
complete, and there is I do have a video newsletter where I review my watch list and my signals uh, Sunday, Tuesday, and Thursday every
That's
week. It's about an
interesting.
hour and a half every other day. So it's just really just showing what I would be doing anyway, but I'm just recording it and talking over the charts.
I'm sure people are interested to see that, though. That's interesting.
Yeah, that's been interesting too.
Well, listen. Thank you for talking to me for a little bit. Like I said, I didn't know anything about the university or the classes or anything. All I knew was that you are a positive force in the sea of negative Twitter. So, thank you for that. And I actually talked to a couple of my buddies who are Twitters, like I'll do before I interview somebody, and a couple of my buddies who are traders, and said, well, what's the scouting report on this Steve guy? And they're like, oh, I love his tweets. I love, he inspires me every day. So you're helping out a lot of people just through positivity and pointing people into the direction of awesome content. So thank you for that.
Yeah, that is great. I appreciate you. I try to tweet about motivation, inspiration, financial freedom, and the markets and trading. So I'm glad to hear some positive feedback.
Yeah, well, we I can say as one fan we love it, and I will leave links for everybody in the description to your university, your Twitter account, and some of the books you mentioned and people. And I appreciate you coming on the program, and let's try to stay in touch.
All right, sounds great. Thank you so much for having me.
All right, thanks, and thank you folks for watching, and we'll see you next time on the Short Vol Show Live.